I'm Giuseppe Porcaro, the Head of Outreach and Governance at Bruegel.
And I'm Guntram Wolff, the Director of Bruegel.
I am Maria Demertzis, the Deputy.
And I'm André Sapir, Senior Fellow at Bruegel.
And we are here today in order to discuss and unpack the results of the Eurogroup meeting that finished late in the night yesterday, 9th of April. And we will try to unpack and analyze the results of this meeting, which has been one of the longest meetings ever of the Eurogroup, 16 hours without counting the breaks. So finally, the European finance ministers came to an agreement to present to the European Council, as it was requested by the head of state, to see which kind of measures and packages should face for a joint action for the current situation of crisis linked to the pandemic of the coronavirus. And I will just very quickly remind what has been agreed upon yesterday late in the night. So first of all, they agreed to propose an access to the ESM enhanced conditions credit line with a benchmark amount of 2% of a member state GDP to support financing of direct and indirect healthcare and prevention-related costs, strictly due to the COVID-19 crisis. Directing the spending to this proposed is the only requirement to access this credit line. So this is what is so-called an ESM light conditionality line for health-related costs. The second measure is a guarantee provided by the European Investment Bank, a guarantee fund of 25 billion to support 200 billion of financing for companies with a focus on small and medium enterprises. Then, third point they agreed upon is the establishment of a temporary loan-based instrument called SURE, supporting member states to protect employment. Loans on favorable terms will be provided to member states up to 100 billion euro, building on the EU budget as much as possible and on guarantees from the member states. And fourth, last but not least, they agreed to work on a recovery fund to kickstart the economy in line with the European priorities after the crisis. Apparently, there was a broad agreement to disagree on the financing of the fund, with mutualized debt insurance being favored by some and strongly opposed by others, as we all know, as we've been reading in the press. So, Maria, André, and Guntram, which are your first immediate reactions on those measures?
Well, so perhaps my first reaction, Giuseppe, is that I'm glad that there is a deal. I think if we had failed to have a deal, it would have been a disaster. So the first thing is it's good to have a deal. I guess my second point is the deal is of a relatively small size. So it is basically a deal that supports the borrowing of member states. The lending rates will be lower than market rates for some countries, but the deal clearly makes clear that debt remains national debt, so there's no transfer really in this deal. And I guess what I find most positive is a clear support signal for the ECB, which is also part of the statement. And I think what we are seeing and will be seeing is more national borrowing to finance the big fiscal response that is ongoing in Europe. And that debt will to significant extent be bought by the European Central Bank through its PEPP program or even a second PEPP program later down the road. And it's good that there's political consensus to agree on a package and to agree that the ECB actually supports national borrowing. So that's the positive. But overall, the size of the package and the risk-sharing element is very limited. And so the support in terms of fiscal support that is granted to weaker member states is actually relatively small.
André, what is your take?
I'm in broad agreement with what Guntram has just said. I would say it's okay. What was done yesterday really matched my expectation. It's not bold, but it's a good start. Indeed, it would have been a disaster if they had not agreed yesterday. But personally, I did not expect more at this stage. In a sense, one is back to where we were during the sovereign debt crisis, where it took many Eurogroup meetings to each time increase the firepower. But I think for those who are disappointed, and I hear a number of people who are disappointed that the measures were maybe not sufficiently bold, I think they have to go back to the meeting of the heads of states. In a sense, it's the heads of states who were not bold by saying, no, you, Eurogroup, you come up with something. If one wanted to have something bolder, it would have been for the heads of states to really take the main initiative here. Here, the heads of states will react to what the Eurogroup has done, will endorse it. In a sense, okay, the Eurogroup functions in a very different manner than the ECB. When the ECB announces measures, they are bold measures. The Eurogroup just does not operate that way. So my expectation was that there would be an agreement. It would be an okay agreement to start with, and it will keep the ball rolling, but there will need to be other meetings down the road to go further.
Thank you, Andrea. We are going to come back to a couple of your reflections, especially also the politics of what is going to happen in the next steps and what is going to be the role of the head of states, because you pointed out this is not completely a closed process yet. And Maria, what is your opinion, your first reactions to this package?
You started, Giuseppe, by saying that this was the longest Eurogroup ever. It's very hard to believe that this is true. Some of us remember that Eurogroups of 2015, they were very long. You would have hoped that we have easier ways of communicating, easier ways of agreeing with each other. So that in itself is not a good sign that it's extremely difficult to agree. Now, I take the point that this is a much bigger shock than it was back in the financial crisis. So the problems are bigger, and therefore, the ability to agree and a compromise would be bigger. But still, the very fact that it took us such a long time to come to some agreement is, in my reading, a disappointment. However, I do share, and it's emphatically share, the view that some agreement is better than no agreement. And I certainly agree with what André said, that it is up to the heads of state to actually seal the deal, because more than economics, what we require is politics. So the mandate that the Eurogroup has is much more than what is actually needed for the step that we need to take to provide a decisive solution. My first assessment, and I hope we go back to the details, is that this is a first step. Many steps need to follow with a lot of political commitment in order to convincingly persuade the citizens, not about the firepower, because Europe has a lot of firepower, especially if you compare it with the US, but about the distribution of that firepower.
So, Maria, you point out exactly the core of the issue, which is the devil is in the details to a certain extent. So let's try to go a little bit more into the mechanics of what has been decided, and let's try also for our listeners to explain a little bit more in details what each of those measures means and how do they add up eventually to what has been already put in place in the previous weeks, both by the European Union, by the ECB, and then, as Guntram also pointed out, we shouldn't forget as well what kind of national fiscal response has been put in place. So we should now trying to put this into the wider context and trying to see how those measures act in this context. Who wants to start to go a little bit into the details and the nitty-gritty stuff of the things.
Look, I'm happy to come in on this. The figure that is put forward, this 500 billion. The 500 billion, half of that 500 billion is what would come potentially through the ESM. We have given this figure of 2% of each of member states' GDP. So if you look at the euro area GDP, 2% of euro area GDP is 240 billion. So half of the 500 billion is what the ESM could potentially lend to member states. Now, it's clear that not all member states will go to the ESM for borrowing. Certainly Germany is not going to go there. So the figure of 240 billion is the maximum figure that could be released via the ESM. But as Maria has just indicated, the real issue is that there are distributional questions here. For some countries that are particularly hit by the health crisis, and therefore also by the economic crisis that is unfolding from there, some of those countries, as we have seen, they have difficulties to put forward national measures. And I fully agree with Guntram that, one can't just look at this 500 billion coming from, let's say, European money, right? One has to add to that all that is being done at the national level. But if we look at the national level, we see that some countries have huge capacity and some countries do not have much capacity. And that's precisely why we wanted to have the European capacity, to help those countries use their national money when they are rather constrained by their ability and also by how much they need to put forward. So this is what we will really need to see. 2% of GDP for Italy, I think that's about 30 to 40 billion. Probably Spain will draw on that as well, and maybe one or two other countries. So we are much below, obviously, the 500 billion and the 250 billion that the ESM could potentially unleash. So the numbers here, one has to see, will be smaller. The real question is, again, countries like Italy, countries like Spain, that are severely hit by the crisis. What will these measures do for them?
And speaking about what, Guntram, just speaking about what these measures do, I have an interesting question from Aleš Gaube from the daily Dnevnik in Slovenia, a journalist, who is asking if you can please explain how companies and citizens will benefit by each pillar of the plan adopted by the Eurogroup. And I think this can help us to guide a little bit the way to unpack each of the measures in order to explain to our listeners.
Well, perhaps can I take that and also respond a bit to what André said. I mean, perhaps first to André's point. I mean, indeed, the ESM money will probably not be used at all. I mean, it might be used by some countries. And if it's used, that money is actually quite limited. My reading of why we have the ESM part of the package is as a stopgap measure in case we see sovereign spreads rise and we want to essentially initiate the OMT program. At the moment, so the OMT program being the program where the ECB, after an agreement of the ESM, can actually buy national debt of a specific country at a large scale, deviating from the capital keys. My current reading is that the Eurogroup actually supports a strategy of the ECB buying lots of sovereign debts of all countries, so as to allow those countries, all of those countries, to actually be able to borrow in the markets. And so I'm saying we are almost the Eurogroup is almost endorsing the fact that we move a bit away from monetary dominance towards fiscal dominance, to use a technical term. So in other words, giving the fiscal authorities the scope to actually borrow and essentially absorb that in the balance sheet of the ECB. And I think that's a good thing. And in a sense, the ESM is only a stopgap measure in case one would have to deviate from the capital key. So the real firepower here comes from the ECB. And again, I think it's important that the ECB actually gets the political support, the clear and explicit political support, which it got from the European Council and which it got from the Eurogroup. And so that allows a country like Italy to actually announce, I think, a program of 400 billion, which is not yet enacted, but which is a huge program given the Italian economy. That's thanks to the ECB being there in the market and making sure that yields stay under control. Now, then the question is how can these measures translate into support for actual citizens and companies? Well, the EU does not spend money directly. The EU doesn't have spending instruments, really. So essentially all of these measures, and we have to talk about the EIB, the European Investment Bank, where the things are a bit different. But the ESM essentially gives loans to countries. The ECB makes sure that countries can borrow in the market. And those countries then decide on how to spend the money. And so countries have taken very significant measures already, both in terms of actual support for companies, for households, but also in terms of giving liquidity guarantees to the companies so that they can, do not run into liquidity problems. So it's really empowering the states. This EU package is trying to empower states to basically be able to borrow and do their job vis-a-vis companies and households.
If I may add to that, Giuseppe, I certainly agree with Guntram on the part of the ECB. I think the real difference here, the real clincher, is the ECB. What the ECB had announced 10 days ago is really what enables countries to go out to the market, to have access to the markets and have doable access to the market. So I think that's absolutely correct in my view. But it's here we are talking about what was decided yesterday in the Eurogroup. I think the endorsement of the ECB we already by the political parties, the political side of the argument was done before yesterday. So I don't think we needed the Eurogroup of yesterday to have the endorsement of the ECB. So the question is, what is new that came out of the meeting yesterday, and what difference can that make? The ESM, I agree with André, and I think Guntram said similar things. I think that, for the sake of argument, I think the ESM, the action that was taken yesterday, is more or less symbolic. I don't think it will make much difference. Countries like Germany or the Netherlands or others will not actually tap because they don't need it. And those who really need it, countries like Italy and Spain, they're not going to want it. They do not want it because they're afraid of any conditionality, despite the fact that what it says in the announcement is for direct and indirect healthcare costs. I don't think anybody is going to use the ESM. Personally, I have never believed that the ESM in the current juncture is the correct tool for approaching the issue. And I think this is more or less where we're going. We're going to see other tools coming in place rather than ESM. I think, sure, the argument on the unemployment insurance is an excellent tool, even if it's small. Again, remember, this is the first step, simply because it also provides a framework for unemployment insurance, which is a macroeconomic stabilization role, which I think is something that should stay with us even after all of this. It's a good tool to have in Europe, and we've never had anything like that. And I'm delighted to see that, as Guntram described, this is going to enable countries to guarantee their insurance. The next step is going to mutualize that. I think the real new stuff here is the one that remains incomplete. And that is the recovery fund. I think it's very encouraging to see a wording of, even if it is incredibly vague, but it is a basis for the political establishment to go back on the table and try and identify exactly how much of the distribution we are willing to do and at what speed.
Let me just add one element here about the unemployment element. I think I disagree a little bit with Maria. optimism that this is opening the way for something that will remain with us.
No, it's a hope. It's not an optimism.
It's hope. Exactly. So I think that the statement is very clear that this hope should not be too high, because it is mentioned explicitly that this is temporary, the duration of the crisis. So that doesn't mean that it will not happen, but it means that we are not there yet. That there was a lot of disagreement on this between those who said, the euro area needs such an instrument, and now is the time to put it in place, and then it will remain. And those who said, no, the euro area does not need this kind of an instrument. Okay, but we agree that this is a special period now, and one can roll it out for a very, very limited time, but do not think that this will be permanent. So that fight is not over. It will still come with us.
I mean, perhaps one point to add on this, on this unemployment fund, and there I agree with Maria. I think it's still quite a significant step in the sense that it operates outside of the intergovernmental ESM. So it operates with guarantees, and it's done by the Commission and the Parliament, while not having to approve the legislation for the SURE. The European Parliament is still involved through the EU budget process. And so in that sense, it's actually quite a change to the previous Eurozone rescue mechanisms that we've created, which were all based on intergovernmental methods. And so it gives a bit of a different flavor to the whole package. And it allows also to give, I think, the 100 billion, I mean, they can really be directed to the countries hardest hit. And so in that sense, I'm positive. But I agree with you, André, we don't know whether this will be permanent. And of course, the resistance in the north of Europe to anything that sounds permanent is huge. And perhaps one of the mistakes in this debate at the beginning was that some in the south of Europe thought this is now the way to introduce a permanent transfer union in the Eurozone, and that created a lot of opposition in the north of Europe. I think we're just politically not there, and so it seems to me creating something that's strong for the current situation is already an achievement. And then, SURE is one step. It's a small step, but at least it's a step.
Okay, but let me take back this point. Something strong for the current situation. Is that something strong for the current situation? Is this strong enough? And I have a question from a journalist from Italy, Tommaso Galavotti from ADN Kronos, a news agency, who is asking exactly this. Do you think that the package adopted by the Eurogroup is enough to save Italy from disaster? Obviously, he also pointed out that they won't use the ESM, and Corona bonds seem quite far away, as you just explained. So he would like to have a comment on this.
May I jump in onto this? I have learned to listen to André's sense of realism, and I think that is exactly what he's doing also here. One of the reasons why the frugal North has opposed any discussion about the Corona bonds or mutualization of debt is even for temporary, for the length of 6 months, one year, irrespective of how this lasts, is because of fear of creep-in. So you put in measures temporarily, and they have a nagging tendency to stay forever. You see, and they stop it right on its heels. You never start the conversation because it might creep in. This is actually the good news, and here I tend to agree with the way that how Guntram phrased it. It is actually, we didn't have that problem with SURE. We put in an unemployment insurance that we've never had before, and even if it doesn't stay there, there will be a precedent. So the creeping fear is actually justified, in my view. Why I have a sense of hope. But I mean, I think that's there is other things that we need to do, and let's not dwell on this. It's a good step. And coming to the question, I mean, I think we all agreed at the beginning that this is a first step. A lot more is needed. And I think the Italians at this point will be looking for explicit measures that point in the direction of solidarity and appreciation that the problem in Italy is much bigger. I hope we can come back to this when we talk about debt further down the conversation, because I think there are things we can do now to prevent Italy from coming to the edge. And what we've seen for the Eurogroup yesterday is not enough, but it goes in the right direction. I think we need to be back on the table, but this time at the level of the heads of state.
Right. So
can I add perhaps on Italy, because the Italian question is of course crucial. I mean, I think the first point to make is really that the downturn we are seeing in Italy is going to be huge. And that is also not only related to the fact that the pandemic is more advanced in Italy than elsewhere. It's also related to the fact that the Italian economy, just like the Spanish and the Greek economy, have a significant tourism sector. And I think the tourism will be completely down this year. I think even in an optimistic scenario, I can't believe that in the summer we will have more than 20% of the tourism that we usually have, right? So this is a huge hit to the Italian economy and to the economy of many southern European countries. And so yes, the economic fallout will be huge. Is Italian debt as a consequence unsustainable? Well, I don't share that view. I think Italian debt is sustainable as long as yields are very low, and the yield control is achieved by the ECB essentially. The real question, it seems to me, is will the Italian government mobilize enough fiscal resources now so that we get over this huge downturn and can have a relatively fast recovery going forward? And then, of course, the second question is the recovery plan that we haven't yet discussed and that the Eurogroup hasn't really yet discussed, the sort of the future recovery plan. But, if Italian GDP can resume next year, and if yields remain low, and I think yields will remain low, and they tend to remain low after pandemics, I don't see really a risk of debt sustainability for Italy. And I think that's why it's also totally appropriate that the Italian government has announced a big program, and they should really do a big program, because that's the best thing also for debt sustainability, because it helps prevent a destruction of GDP that is permanent.
And let's spend maybe a few words about the fourth pillar, which obviously is the more vague one, and where perhaps the heads of state need still to discuss, because that's the more like forward-looking part of the story. That's also why reading the Italian press and the declarations of Minister Gualtieri and the others it's the one where a certain discussion about mutualization in one way or another is still like kind of open, or at least there is still kind of a push on mutualization over there. The question is this like something that has been put there just to take time and buy time in this discussion? Or do you think that between now and the European Council there is going to be a breakthrough over there and really maybe think another kind of instruments that might be, fit for the purpose, enough big and ambitious for the challenge that is ahead, not only for the Italian economy, but for the economies of many other member states, and at the same time provide, a political card that also, I speak about the Italians, but in general, some of the member states can go back to their own constituencies, meaning their own electorate, in order to keep a certain, faith of in the European project and trying to make things workable on a political level. Because it's true, as you say, Guntram, that there can be a plan, and economically speaking, this could be viable, but it can also be, politically speaking, something that is very difficult to implement in case there is going to be a political upheaval in some of the countries. And this is an element that we cannot take out of our discussion.
Let me come in on this because I think that this is indeed the big question. So I think, as we all said at the start, it's great that there was an agreement yesterday. The question now whether this agreement paves the way towards an agreement on the fourth pillar that has been left out essentially from yesterday's decision. So certainly the fact that there is no acrimony, it seems, between the countries, that every country got something. No country was forced to make a decision or to agree on something that it really did not want, means that everybody's still around the table and everybody wants to continue the journey. So I think politically, this is definitely good, and that should help the heads of states to be able to take the baton and to discuss the recovery plan. Now, what kind of recovery plan? It seems to me that what the French government had put on the table, talking about a recovery fund. Sometime one heard a figure of 3% of GDP for a recovery fund. I think is the kind of right measures. This is not, one does not have to use the term mutualization. I think one can use the term joint action. I think that is good enough. The term mutualization is probably not a desirable term at this stage. But what is clear is that one needs joint action, not simply providing credit for each country to act individually. So no one needs a joint plan for the way we will recover, and that requires some serious thinking. For instance, how do we combine this potential recovery plan with the Green Deal? That is the kind of question I think that they will have to deal with. This would be desirable, obviously. There was a big plan on the part of the Union, the Green Deal, right? And that was sort of moved towards a new way of Europe and maybe the world to operate in a greener manner, in a more sustainable manner. Well, clearly, one does need a lot of investment to restart the machine. Are we going to put this money, if we can agree on the size, on the package of the money, can we agree that this money should be spent towards greening the European economy, the European society, and reaching the Paris Agreement goal? I think that's going to be the kind of big issue. It's clearly something not for ministers of finance. This is clearly something for the heads of states and governments.
Can I come in on this one, Giuseppe? Because
yes,
I think
please.
that's a very important conversation, because it is also about the future, not only about today. I certainly agree that the mutualization of risks has become such a toxic and more or less divisive, actually, word, that we should find ways of bypassing it without losing the concept, because we still need to be careful that the decisions that we take today do not prevent this recovery phase from happening effectively, because we can get stuck in a perpetual stagnation for much longer than we actually necessarily need to. And here I'd like to come back to this issue of the Italian debt, because at the end of the day, this is really what happens to the Italian debt is going to be decisive for the rest of Europe, because Italy is big and it's important in this respect. Unfortunately, I don't share the view of, I'm not so optimistic as Guntram is in terms of the sustainability of the Italian debt. There is now possible scenarios where Italy comes out of it with 40 percentage points more on its debt. This is enormous. Correct? A lot of it will be owned by the ECB, but you need a commitment from the ECB that is going to perpetually buying Italian debt. So Italy would never have to buy back from the ECB. The ECB is not going to commit at this stage to perpetual QE. It mustn't, because it's an independent state. So Italy will have continue financing needs. Even at zero interest rate, it will have to buy back the stock, because we're talking about the stock here. It's the stock of debt that matters. And the markets will be looking at Italy in 6 months from now. They will be looking at the stock of debt that is at the hands of the ECB and at the stock of debt that is tradable, and will be making their minds up in terms of whether it's sustainable or not. So this is why I think that, and not just for Italy, but for everybody now, some of the financing of the crisis needs to happen differently than debt, because the stock of debt will be insurmountable, and decisions that we take today should not prevent us from being able to go back to the recovery phase. This is why I think we need to pay attention to monetization discussions, and there are many options out there. Some of it are being drawn up at Bruegel, but there are many options out there that we need to think about. The ECB role, how is that going to play out, such that we don't prevent the recovery phase in 6 months from now. I think this is what the heads of state will be discussing in 2 weeks, in 3 weeks, in 4 weeks, and it continues, because Europe moves in small steps and will be taking small decisions. I hope this parameter stays very much on the table.
Guntram. Just to add on this point, I think, Maria, we basically agree, it seems to me. As long as the ECB holds the debt and yields are low, and there is no debt sustainability in Italy. Now, if yields go up and the ECB doesn't hold the debt, then we have a problem. Now, the real limits to how much debt the ECB can hold and how long it can hold it is all about this question of what are the legal limits to it? And of course, one dimension is, of course, the EU treaties prohibit monetization. Now, the reality is that the concept of monetization is a very fluffy one, and there's all kinds of shades of monetization, and QE is a first start, and it becomes an issue really at the stage, it seems to me, where the holdings of debt in the balance sheet of the ECB are so big that the ECB cannot control effectively anymore monetary supply and not effectively control inflation anymore. And in my assessment, even if the PEP is twice as large as currently, so at 1.5 trillion, I don't think the ECB would lose its control over inflation. So on the contrary, all the numbers we are seeing is that inflation has actually come down. And so I think in the end, the ECB can hold a significant amount of debt. It can hold it for a very long period of time. Officially, they cannot say that, the ECB cannot say that it holds it to maturity, because then it would run against the monetary financing, but you can get very close to that and be still legally compatible. So it seems to me that it's almost unavoidable that the ECB will hold a significant amount of debt, and I don't think we are at a stage where it creates inflationary worries.
No.
So in that sense, I'm more relaxed about this, and then the real limit is the political limit and the legal limits, and that's why I actually think it is important that the Eurogroup also endorsed this, because it is a political backup.
If I may, just a more detailed point, because I think that's it's important that we agree on what it is that we agree on and what we disagree on. Inflation risks are not there. Funding costs will be low. Growth, however, will be low, and the debt stock will be high. All four matter for debt sustainability. So do look good and two look substantially bad. And actually, the prospect of two of the things that will determine the debt
look bad. Sorry, growth
prospects and the debt stock. I think these are important, and of course the mix of funding is important. So you have parameters that can tip you on the bad equilibrium. And I remain sober. And if I may say, irrespective of whether you are an optimist and I'm a pessimist, I think what's crucial is that we prepare for something like that. Europe needs to be mechanism in place. So the ESM might have to be used because Italy loses access. It needs to have the firing power to do that. So I think even if and I hope you're right, but I'm not so sure. We need to prepare for such an event down the line.
Okay, I think that we have few questions from the audience, which are very interesting. They are a little bit about everything we've been discussing so far. But I see that there are a couple of questions about the recovery plan which are linked to the EU budget and specifically the MFF, because we were there now to discuss a little bit about the follow-up and the fourth pillar. And there are a couple of questions about the MFF and asking if we can elaborate a little bit more on the issue of the multi-annual financial framework, which is mentioned in the Eurogroup statement. Actually, this question is coming from Panos Karvounis, who is a former head of the Commission of Representation in Greece.
I mean, on the MFF, unless André, you want to take it, or Maria.
No, go ahead, Guntram. You're bestly positioned for this.
No, I don't. I'm not so sure. I mean, I think on the MFF, I mean, just perhaps to remind our listeners, the next multi-annual financial framework will start next year. It will last for 7 years, and its amount is undecided, and its distribution is undecided. It is typically around 1% of GDP. And so over a period of 7 years, we're talking here of something like €1 trillion euros or a bit more. So that's just the numbers. I think the Eurogroup has mentioned that they will review this. I think the German finance minister, Olaf Scholz, has already said that it's clear that Germany will pay more into the MFF as a consequence of the pandemic. And I'm sure Italy will pay less as a consequence of the pandemic into the next 7-year period of the MFF. So the stabilization element that the MFF always had, which is a stabilization of richer countries paying more and receiving less, and poorer countries paying less and receiving more, that element is there, and I think it will be readjusted going forward because of the fallout of the pandemic. So there is an element of redistribution that we will see that will actually be relevant not just for 1 year, but for a 7-year period. Now, are these numbers huge? No, but for some countries, they are not insignificant. And for Italy, it's actually interesting that Italy in the current MFF is still a net payer. And with the current shock, I would probably expect that Italy becomes a net recipient for the next 7-year period. So a bit of redistribution is going to happen through the MFF. But as you know, these negotiations are always very difficult, exactly because of this, because of the redistribution element.
So Guntram, still continuing on the potential instruments, there was another question about BIC. Is that an instrument heads of states and governments could explore as financially innovative to use for the recovery fund? The BIC is the budgetary tool dedicated to the euro area for those that are not familiar to it. And I see Guntram laughing.
No, I mean, this instrument isn't in place, right? I mean, it will be part of the next MFF. And so that will be part of the negotiation. But as we all know, what has been agreed for the next MFF with this BIC is macroeconomically extremely small. So I don't see this as a big element.
And going still into some of the questions of the audience, I would like to come back, if we can, for a second on the shore issue, the issue of the employment. There was a question from Bernadette Segol, who is asking us if we can tell her more on the unemployment benefit mentioned earlier on, and what is exactly the agreement saying, and what would it be some sort of debt mutualization as well?
So if I may, but I'm only going to repeat what Guntram said at the very beginning, which is that this is an EU program, and it's going to be loans to member states, but it's loans without conditionality. So it's because they're not going through the ESM, they will go through the European Commission. It will be a loan. It will be available to all EU states, and will be there to enable countries to borrow from them very cheaply to finance unemployment insurance. I think that's what the program is there to do, and it will be managed by the Commission, which I think is very good news.
Good. And then I had another bunch of questions related to non-Euro area member states, which I think it would be interesting to spend some time on. You know, what it's in for the broader constellation of the members of the European Union here, and what the packages that are being approved now tells us a little bit more about that.
Let me take this issue. I think this is something that has been worrying me a little bit for a while. Clearly, at the moment, it is the Euro area countries that are mainly affected by, or some of the Euro area countries that are mainly affected by the pandemic. Although there are some non-Euro area countries like Sweden that are getting into quite a bit of difficulty on the health side, not necessarily on the economic side. But it's true that the countries of Central and Eastern Europe, luckily for them, they have not been much affected. So in a sense, the discussion in the Euro area is warranted, the creation of new tools. But I think I was very, very pleased, like my two colleagues, that there is also a EU-wide instrument, sure. And we don't know what will happen in the months ahead, whether some of the countries that are not in the Euro area, some of the EU members that are not in the Euro area, will also need some kind of instrument to deal with their difficulties. So I think, as I said, it was very good that the Eurogroup recognized the need to have not just intergovernmental, but also EU instrument. Whether that will be enough in the future, we shall see. I think the main discussion really to come back to the budget will be there. If you look at the current MFF, the current EU budget that is, ending its 7-year cycle at the end of this year, it's clear that the main transfers from richer countries to poorer countries is from the Western countries towards the Central and Eastern European countries, because they are the relatively more lower income countries. And those are the countries that are obviously worried that in the next cycle, they will see the transfers that they are getting, that they will see that transfer come down because indeed Italy will have more need, and Italy is losing also in terms of GDP and GDP per capita compared to other countries. So I think we saw already that the negotiation on the MFF was a very complicated negotiation before the coronavirus. Are we expecting that because of the coronavirus crisis, it's going to be suddenly easier to make a deal on the MFF? I think it's the other way around. It's going to be even more complicated. And the dimension indeed here of the core countries versus the South versus the East, this is going to be a really big issue coming.
Guntram and Maria, we are coming towards the end almost of the episode, so maybe also a few comments from your side to conclude our conversation. I know it's not a conversation that is closed because this is ongoing, of course, but maybe some concluding remarks to complement what André just said, and also a little bit something that is forward-looking, not just about looking to the actual results of what has been happening yesterday night at the Eurogroup, but looking at the way ahead for that specific process, but the way ahead for Europe in this very exceptional and not great circumstance of the pandemic.
Yeah, perhaps if I can start, and then perhaps Guntram would have the final word. The one line that I found very encouraging in the announcement from yesterday was this line which said something like commensurate with the extraordinary cost of the crisis. So So I think there is an appreciation, despite all the fights we've seen in the previous days. I think there is an appreciation of the size of the shock, and there is readiness to do things slowly but surely. This is the bit that I think we need to sort of rely on and hope that we can do this in real time. So because I mean, Europe has a tendency to procrastinate, and that time that we cannot really afford. But I am encouraged by that, and there is still hope for a recovery fund that is convincing for the size of the shock that we are seeing.
Guntram?
Well, 2 quick points. I think the first point is that the sum of all the fiscal responses in the Eurozone is actually very significant already. And it should not be equated with the 500 billion number that the Eurogroup came up with yesterday. So if we do cross country comparisons with the United States headline figure is something like 2.6 trillion. Well, we come actually to very close numbers in the Eurozone if we add up the national responses. I think that's the first point to make. The second point I would make is that I completely agree that this discussion is not over, and it's a long and painful political process, and politics hasn't fully delivered. I would love politics to deliver more. At the same time, if you ask me about a prediction, I don't see sort of the federal vision that we as academics have materialize. We will not see a large-scale Eurobond with joint and several borrowing and significant transfers. We are not a political union, but I do hope that we will get more politics and more political ownership, because one thing is clear, it cannot be in the interest of any country that the neighboring countries are not doing well. I mean, we are so tightly interconnected. There's so many externalities. We really need to work together. And so I hope we will not stay at the state of just being a confederation of states, while at the same time I see we will not be a federation. So can we get in the middle a bit more progress, a bit more leadership from the European Council would be welcome.
And thank you very much, Guntram, and I would like to thank Maria and Andrea as well for this very put together very quickly podcast and live stream on this kind of very exceptional circumstances. And I would like to thank all the listeners, the ones that have participated actively by asking questions, but also all the others that have been tuning in and are listening to The Sound of Economics. And of course, as we all say, this is an ongoing discussion. We at Bruegel, we are really functioning in a sort of coronavirus emergency kind of mode, providing you as much as possible with analysis, real time, but also a little bit starting to see the medium to long term effects of what is going on. So everything we discussed today in this podcast is subject of ongoing analysis by our scholars, and you will find all this analysis on our website www.bruegel.org. Until next time, bye bye.